All right, traders, the green streak continues. The portfolio is up 1.40% on the day. Had two quick in and out scalps on SPY. Going to be recapping the trades towards the end of this video. With that being said, tomorrow's going to be a very lucrative trading day because we have all these volatile earnings runners, and we also have SPY now trading at a key critical make it or break it top of the channel level. It has been in this channel for over a month and 1 week now. Tomorrow is going to be one of the most lucrative days to be trading within the market, especially to finish July on a strong green note. With that being said, I am going to show you how to determine. The purpose of this video is going to show you how to determine if this is going to be a bull or bear trap heading into tomorrow. It's going to show you how to identify the overall price direction, how to identify very lucrative trading scalping opportunities at these key make it or break it levels. It's going to show you how to determine the direction for tomorrow so you can bank on these scalping opportunities with these options, right? So in terms of the options, I'm going with the closest expirations and I'm going with the closest strike to the stock price, right? The at the money strikes. So with that being said, this is what I want to bring awareness to. We are at, in terms of the SPY, right? We are now at the top of the channel. How long has it been in this channel? It's been in this channel since June 10th, 2022. And you could see there's a gap to fill above at 40144. This video is going to show you how to determine if that gap is going to start to fill, or is it going to be a bull trap and it's going to top out at key resistance towards 395.78 right here, or this major key resistance at 393 right here, 393 right here, multiple times, right? It's going to show you how to determine the direction of SPY, right? So the purpose of this video is really going to show you how to determine if we're going to be on track to fill this gap, or is it going to be a micro bull trap and we're going to head back down to fill this gap below. So here's some things that I want to bring awareness to. Obviously, we are in a bear market, right? So with that being said, I've been focusing on buying puts on SPY when it fills these higher gaps towards the high of these channels. For example, right here, there's a gap to fill. It's at a key resistance channel with big downside potential. Buy puts right here. Here's another example. It's at that same gap fill level right here. And then I buy puts right around here when it fills the gap, forms the bearish confirmations, right? You have to use confirmation reactions. I taught this in my last videos. Make sure you watch those. So that's what I've been focused on doing. And we are now back at that key resistance level. However, there's currently no gap. There's currently no gap at the moment, right? We have to see if it's going to gap up or gap down tomorrow, right? So there's currently no gap waiting to fill above except for this one at 40144. So write that down. That's the best price to buy puts on SPY at 40144. Whether it's going to happen this week or next week, that's the best price. If it does turn 393 to 396 into support, into the floor, and not into a roof and not into a resistance level, it will be on track to fill the gap. I'm going to show you how to determine if it's bull or bear trap right now, right? So things I want to bring awareness to. We're towards the top of this channel. It's been pushing up. There's a gap to fill above. It has been faking out at 396. It has been faking out at 393 multiple times. Some things I want to bring awareness to. When it did top out right here at this resistance, there was a gap to fill. There was a gap to fill right here, and it topped out and it had a reversal to come back down to fill this gap below. And then here's another example. When it topped out right here yesterday and had a nice micro bull trap for scalping, for day trading, there was a gap to fill right here, right? So things I want to bring awareness to right now, these reversals have been occurring towards the top of this channel when SPY has been filling these gaps that are waiting to fill above. And as of now, there is no more gaps waiting to fill above except for this one at 40144 in terms of the micro chart. If you go further back, there's actually a higher one, I believe, in the 460s. So that's one thing I want to bring awareness, right? We could be due for that gap fill because there's no gaps to fill above. Now, here's some other things that I want to bring awareness to. We're approaching major resistance. If it reacts as a resistance, this is going to start to sell off and it's going to be another quick micro bull trap to then come back down to start to fill this gap below at 381.95. So now what I'm going to show you, giving what the chart has given me, I'm going to show you how to determine if this is going to be a roof tomorrow and it's going to be a bull trap and SPY is going to start to crash back down, or is this going to be a floor tomorrow and it's going to start to break out and it's going to start to go on a tear up to fill this gap, right? So things to keep in mind. There's no gap to fill above, so that makes it a little bit less bearish in terms of my technical strategy, but there's more to it. But in terms of like the best setups, the best strategy, it makes it less appealing, even though it's at the top of the channel, because there's no gap to fill above. The gap was here, the gap was here. They filled, they had their short little micro reversals. Even right here, there was a gap to fill above on SPY, and SPY had a little micro reversal on this day, right? I'm talking for day trading, for very lucrative trading scalping opportunities where you get in, you get out on the quickest expiration, day trading at the best levels with the closest at the money strike, the closest strike price to the stock price. That's my style of scalping, of trading. Within a couple minutes to 10 minutes, you can make very nice 20-50% returns, especially on a same day expiration, right? So that's what I want to bring awareness to. Now, in terms of some other things that I'm seeing with this chart, I'm seeing an overreaction with some gaps to fill below. That's what I'm seeing. I'm seeing there's a gap to fill below at 381.95. I'm seeing there's a gap to fill below at 377.91. And it wasn't too long ago, this was just at 371, and now we're at 393 in a bear market. Like, are you kidding me, right? So I am seeing an overreaction, which makes puts a little bit more attractive in this situation with these gaps to fill below. What makes puts less attractive is there's no gap to fill above until 401 to 44, right? They were a lot more attractive yesterday because there was a gap to fill at 388.67, right? So I want to explain to you the differences in terms of my strategy and how it works, right? Another thing that makes puts a little bit less attractive, in my opinion, is all these earnings plays. These earnings can move the market. Netflix just had a big move up. Someone asked me about Netflix last week. I told them I don't, in terms of my strategy, I don't YOLO into earnings, but it looks bullish, and it's most likely going to go up. And that's what happened, because that's what the chart was saying. In terms of earnings, if I were to YOLO into earnings, I would wait at key specific price levels. I wouldn't even focus on the fundamentals of the play, right? I would focus on the psychology of the play. And if you looked at the chart on Netflix, I mean, this thing was just so oversold for the micro. And I was pointing out these lines right here. I was pointing out within the chat, there's a gap to fill on Netflix at 168. There's a gap to fill on Netflix at 191. It's been consolidating and holding this level right here for quite some time. It's going to be due for a breakout. It's going to be due for an upside because there's these massive gaps to fill above, right? So another thing that I want to bring awareness to in terms of bullish thesis, we have these earnings, these earnings runners, and they're all breaking out of their monthly channels. While SPY still hasn't broken out of its monthly channel, some of these earnings plays like Netflix are already breaking out. Netflix is up big right now. So that's some things I want to bring awareness to, right? Now, let's discuss in terms of what the market has given me and what can we work with? What can we work with tomorrow? Because we're going to want to trade tomorrow because it's going to have a big move. It's at a very lucrative trading opportunity, right? One thing I dislike about the puts is there's no gap to fill above. That's the main thing. But it's going to be a very good day to trade tomorrow. So we're going to have to try our best to determine whether this is bullish or bearish, and then get in, get out very, very quickly, lock in our profits, right? Not holding these too long. So with that being said, this is what I'm going to use to determine the price action, the price direction of tomorrow, right? So it's going to be very reliant on the pre-market chart, tomorrow. So let's just kind of break this down in terms of possibilities. The SPY closed at 392.27, right? So it closed at 392.27. I want you to write that level down. That's going to be the previous closing price. Now listen to this. If the SPY gaps up tomorrow, the key resistance levels are going to be the pre-market highs, wherever that is. So if it gaps up tomorrow and it's starting to pull back in the pre-market, especially if this drops under 392.27 in the pre-market or towards open, that's a very bearish confirmation if it goes green to red. So in terms of some of the best levels to play puts, if that's what you were interested in doing, here's the way to go about it tomorrow. I'm going to give you a resistance level and I'm going to give you a support level. These are going to be two scalping opportunities. If the SPY, so write this down, if the SPY gaps up, if it gaps up tomorrow, what you're going to want to see is a nice little pullback. If you get a nice little pullback and it, it's starting to go under that previous closing price, it doesn't have to, but ideally you want it to, then what you're going to want to do is, again, ideally you're going to want it to go into the previous closing price in the pre-market. If it doesn't, then you want a decent pullback. What you're going to want to do from there is, here's what you can do. You can play puts on the retest at the pre-market highs, right? So you don't do anything. You just wait for it to go back to the pre-market highs. If it looks bearish, if it's forming the trend reversal candlesticks that I discussed, the wicks, the bearish confirmations, if it looks like a roof is forming and not a floor where it's breaking out, pulls back, and then turns previous pre-market highs into support and then starts to run. If it looks like a roof is forming, resistance is forming, the bearish wicks, the lower highs, then you could play puts at the pre-market high retest. That's the first trade idea if it gaps up tomorrow. Now here's the second trade idea. So the second trade idea is this can work whether it gaps up or if it gaps down tomorrow, right? So I'm showing you some charts, how it's recently been reacting towards this level. And you can see it's been topping out fairly morning. So on this day, it gapped up and then it just went straight under the previous closing price and it ripped back up and turns it into resistance. Then it starts selling off. On this day right here, it just cracked right through. So this is the second trading case scenario I have for you. And I showed you how to determine this because SPY recently had a nice scalping opportunity yesterday to determine if it was going to be a put play at support. Now I'm going to show you how to do it at support. So in terms of support, which is still technically a resistance level, this is a lower level to go with. If the SPY gaps down, buy puts at the previous closing price. If it gaps down, buy puts at the previous closing price. And then this is the other thing in terms of the gapping up part. If it gaps up, so if SPY gaps up and then it goes green to red, wait for it to form resistance at the previous closing price. So this is what I'm gonna show you right here. And when I'm doing this, I'm using the 5-minute chart and I'm using the 1 day 5-minute, and I'm using the I'm using the minute chart and the 5-minute chart. Very micro. I'm very, very micro trading in and out for scalping, going with the close expiration, right? So what I'm telling you is this is what you want. If it gaps down tomorrow, puts at the previous closing price. If it gaps up, this is the second scalping opportunity I have for you. If it goes green to red, if it breaks under the previous closing price, remember 392.27 is the previous closing price. If it breaks under, I would not buy puts right away. What I would do is I would wait for it to bounce back up. And then if it retests that previous closing price, then I would play the puts. If it retests, starts to have a pullback, see how it's just sitting, it's not breaking out, see how it touches. That's what you want. You want it to be forming wicks, top wicks. Top wicks, top wicks, top wicks, some red candles at these key resistance levels. That is what you want. That's the best confirmation using the daily chart, my trading style, the entries, the gap trading strategies. You combine that with the candlesticks. That's the best thing you could possibly be doing in terms of these entries, man. And remember what I told you. When you buy puts, you now know the key levels. 392.27 in the pre-market high retest. You also know there's a lot of resistance on the daily at 393 and 395.97, right? So I'm sharing with you the bear thesis. I'm about to go over the bull thesis now very, very soon, right? And you know what to look for. You're looking for bearish wicks. You're looking for failed breakouts. You're looking for weakness. You're looking for it to be struggling. You're looking for some lower highs forming, right? That's what you're looking for. Fairly simple stuff, fairly simple confirmations. Now, in terms of entries, this is very important. When you get the bearish confirmation, when you get the confirmations that I just gave you in terms of when to buy puts, if any of those reactions and confirmations occur, the rule is to then wait and buy the puts at that price on a green candle and not a red candle. Do not buy the puts on red candles. Buy the puts after the reaction and its bearish confirmation forms. Wait for the green candles to come in and then buy puts into the green candles. So you're waiting for a reaction, you're waiting for a bearish confirmation, and then you're playing puts at the best entry possible because you're going to wait for the bounce. You're going to wait for the green candles, and then you buy into the green candles. See, it cracked here bearish, buy into the green candles. Don't wait for the red candles again. If it just cracks through, if it's reacting as resistance, if it's pulling back, if it's reacting bearish at the reactions I just gave you at the key levels on what to look for with the gap ups, with the gap downs, right? Wait for the green candles and then buy the puts into the green candles when it looks bullish again. That's how you do it. That's how I'm getting the best entries, because when I buy puts, I'm buying on green candles. And when I buy calls, I'm buying on red candles. The entries are unreal. You have to look for, difference. You have to look for ways to capitalize within the market, ways to get the best entry. If you think about it, if you're going to use an indicator, use something that says, okay, this is bearish, time to buy puts. Why not just wait a little bit after it says that and then buy the puts when it goes back up again a little bit? And then if it doesn't go back up again a little bit, then oh well, because you have to be getting the best entries on these. The best entry is everything. If you get a best entry and do it how I'm telling you how to do it, you're going to be able to hold a little bit longer than the guy who's in at a terrible entry. He's going to be stopped out where you're in, and where you're in is basically where your stop loss is, because if we can't turn resistance at these levels, we're going to 401. This thing's going to rocket tomorrow if we can't turn these into resistance levels tomorrow. These are the best resistance levels possible. If they can't react as a resistance tomorrow, you better believe this is going to rocket, and the puts and the bears are going to get faked out, right? So you have to respect that, adapt, and if you want, you could switch sides as long as it's a good entry, right? So now let's go over bull theory. So you're looking for a roof at that level, and you're looking for the reactions that I gave you for everything down. Now let's go over the bull theory for tomorrow. So I want you to think of this level. This is going to be your two make it or break it levels. $393. You can see right now we're at 393. It's just sitting. There's no confirmation yet. Right now it's looking pretty choppy. Nothing too strong or too great from the bulls in terms of, after hours. In terms of today, very strong day for the bulls. But in terms of after hours, nothing too special, nothing too great as of now. So if 393 reacts as a resistance, it's going to be that bull trap. If 393 breaks out, it breaks above, it turns it into the floor, it's holding, it's forming support, it's forming bullish bottom wicks instead of bearish top wicks, then the SPY will be on track to go to pre-market highs. And I don't know what the pre-market highs are right now. This is why that analysis updates within Trader Society tomorrow morning. But what I can say right now is if it turns 393 into support, we'll be on track to retest the pre-market highs. If the pre-market highs break above and that turns into support, the next level on the daily for the SPY is 395.78. 395.78 is the next level for the SPY. If that breaks out, turns into support, then it rockets to fill the gap, which is the best level to play the puts. So if 393 turns into a floor tomorrow and it's looking bullish and it's holding, you are not going to want to be on puts until it looks bearish, until it turns into a roof again. So if that does occur, I would wait to buy puts and you get stopped out. I would wait to buy puts at 401.44. Or if it reacts as it turns it, the market flips all the time. Sometimes 393 is going to look like a roof and it's going to look bearish and you're going to play the puts and you might get stopped out. It's okay. You're in the best entry. Sometimes it's going to look like the floor and, and then it just flips. It flips and you can adapt with that flip. You can adapt and switch sides with that flip. In terms of, and I gave you the things to bring awareness to as well. We have some earnings plays which can push the market, but you have to keep in mind this is an overreaction. There is gaps to fill below. We are at key resistance levels. But if 393 does break out and turn into support, calls will start to run. But to me personally, it's just even if it has that big move where 393 turns into support and then it runs to 401.44, I'm kind of okay with sitting on the sidelines or just not doing anything because I just don't like chasing or predicting the impossible. I like to put the odds in my favor. So I'm kind of okay of just not doing nothing if that were to occur. Not saying I'm not going to do nothing, but I'm okay with missing out in that sense and chasing and stuff like that. I am aware SPY can have some sort of big move to the upside right and stuff like that. But I'd much rather just wait in that situation to buy a put at 401.44 and just miss out on the move, right? So with that being said, that's going to help you how to determine the key levels, right? And you're looking to determine if it's a roof or if it's a floor at those key levels. Roof is bearish, floor is bullish support, right? So for it to be a floor, it has to break out, it has to pull back, and then it has to turn that resistance level to a support level and start to bounce again. That's how you determine a floor. In terms of the roof, it has to fake out, break down, pop back up, form lower highs, form the bearish candlesticks, and then you buy puts into those green candles on the way up when it's back to that retest, right? So here's another thing, and I'm truly saving some of the best information until the end. This is one thing that I want to bring awareness to and see. I use all kinds of confirmations. It has to do with history, charts, and patterns. So this is one thing that I'm saving till the end where I'm leaning a little bit more towards bearish. But again, what matters is the information I gave you, the reactions and stuff like that. But this is one of the reasons why I'm leaning a little bit more towards bearish. And this is how I'm kind of seeing things right now. I was looking at NVIDIA, right? And NVIDIA has been following SPY. I was looking at NVIDIA and NVIDIA just hasn't been looking bullish right now in terms of this pattern. And this is what I want to bring awareness to. Take a look at this. NVIDIA has an overreaction, right? Has an overreaction right here. And if you just look at this pattern that I'm going to identify, I think it's safe to say that you would agree that the pattern would be bearish for tomorrow. So let's just kind of go over this. It has this red candle right here. It has this red candle right here. It's at the same price. It's at the same price. The next day it explodes up. It starts breaking out. The next day it explodes up. It starts breaking out. And then if you look what happens on the third day, NVIDIA actually did gap up. It opened up higher than it previously closed. But you can see when it went green to red, it was a great opportunity for a bull trap where the bulls get trapped at the highs again and then it just rockets back down, right? And in terms of how this pattern looks, I'm seeing a lot of similarities. If we compare these two candles at this price, these two candles at this price, they look very, very similar. So if we get some sort of gap up tomorrow, I will be looking for that green to red move. And if that green to red move occurs, I will be looking to play puts. So that's another confirmation that I'm using. I'm studying the charts, studying the market. I'm studying all the confirmations, all the odds that I could put within my favor. And I'm scalping like a sniper, right? So that's one thing that I wanted to bring awareness to as well. So in terms of like overall targets, you might be wondering now, well, what would be the targets if you played puts? What would be the targets if you played calls? If you played calls tomorrow, man, I would not be greedy, man. I would just start locking in gains. If you played puts tomorrow, I would look to be a little bit more patient, but not too patient. I'd be in and out, making a quick, 30% plus return tomorrow. And I gave you two scalping opportunities. You could play it at resistance. You can also play the key breakdown in terms of put side. So that's my thoughts. That's my analysis for the SPY. Now, some things that I do want to bring awareness to. So in terms of stocks right now, I'm not too interested in any stocks, any patterns with stocks right now, besides that one I showed you on NVIDIA. If NVIDIA does go green to red with a gap up tomorrow, I will look to play puts on that as well. But my main focus is SPY right now. I've been killing it, crushing on the SPY. I love trading the SPY, actively trading within it. And that's going to be my main focus. I have started a small account challenge on Monday. I'm going to be making a separate video later this week on why I started this small account challenge. There's a lot of reasons to it. But one of the number one reasons is, it's been the most requested thing within Trader Society. And I can scalp with my large account on the side, and I can also swing trade with my large account on the side. And there's plenty of other things I can make investments, stuff like that. Like there's plenty of other ways to make money. So I'm kind of okay, just, not all the time, but like this time I'm okay. It's been highly requested within Trader Society to start a small account challenge. And that's exactly what I'm doing. So just to give you some background in terms of the small account trading challenge, the goals are to make a 2% return daily and to compound the account. So compounding the account means to consistently compound it, to not take the money out, to keep the money in, and to continue to compound the account, right? So if you have $1,000 and then it flips into 1,200, next day you're trading with that $1,200 balance with your position sizes. So your position sizes are going slightly up because the account went up, right? In that sense, compounding the account consistently, right? If you pull out a compound interest calculator and you take 2% in 250 trading days a year with your account balance, you'll be shocked on how fast exponentially, if you compound the account, your portfolio can grow if you're consistent with these small gains. So that's what I'm looking to do. And in terms of my style of trading for the challenge is going to be scalping. I'm looking to scalp like a sniper, right? So in terms of how I define scalping for my strategy, I get in, I get out very, very quickly within minutes, up to like 10 minutes. I'm not holding for very, very long. So holding really doesn't exist when I'm scalping. I'm getting in, I'm getting out. And like I said, when I play puts, it's on the green candles. When I play calls, it's on the red candles. It automatically gets me a better entry, and it automatically gives me the ability to hold for a smaller loss and for a bigger win. A smaller loss because I get to see how it reacts, whereas the person who bought the puts on the green on the red candles don't get to see how it reacts because they're already stopped out unless they're holding for a big loser. And I'm not holding for a big loser because my entry is so good, and that good entry is going to put me in a position to win bigger as well, right? So there's little tricks you have to do. There is small, little, tiny differences that can make or break someone's portfolio, especially depending on their trading style. And this is something that I've never done. This is something that I started changing a couple months ago, and my results have started going through the roof much, much better. And I've been able to hold my losses a tiny bit longer than I normally would because my entry is better, and my wins have been bigger as well because my entry is better. So that one little tweak, that one little shift, if someone would have taught me within my portfolio and my style of trading, that would have made me a lot more money within the long run. And that's something that I've tweaked within the past couple months. I've tested it, and it's been doing much, much better. It allows me to hold a loser longer than the person who's in before me because they got in at a much worse entry. So I get to see how it reacts. The point I'm trying to make is, like, if I buy a put at 393, then I get to see how it reacts, like a 25 cent, 30 cent, 35 cent move above. I get to see how it reacts. And if it has a little pullback, I'm still in it. If it doesn't have the pullback, then I'm stopped out because I get in and out very, very quickly, right? So sometimes it's generous and it has a pullback, and then I get to see, okay, is 393 the floor? Is this the floor now? And then if it's the floor and it bounces, I tell myself, okay, I got to get out. But if it doesn't have that pullback and just keeps going up, then I don't get to see that reaction. Because for me to see that reaction, I would have to continue to hold into a much bigger loss. And that is something I'm not willing to do. So what tweaked it for me was, if I get a better entry, if I get the bearish confirmation, then instead of getting in on that bearish confirmation, wait for that better entry on the move up when it looks bullish again, then I get a much better chance of seeing how it reacts, even if it were to go above my entry. But if I'm looking to get a put at 393 and it pulls back to 392.50 and it's looking bearish, I got my confirmation, then I buy into that 50-cent pullback, then my risk is where my previous entry was. And if it goes above, I'm not going to be able to hold through it because it's much bigger loss. You see what I'm saying? That one little tweak that I just gave you right there is a difference with a same day expiration. That's a difference of over a 10 to 15% return within minutes. And if you're holding for a bigger win, it's much greater than that if you're holding for a bigger win. I'm scalping. But that's one little tweak. So like that's my style, very in and out. There is going to be rare exceptions where I do believe the overall trend direction will be bullish or bearish, and I'll try to aim for a bigger win. But that's something that I'm not going to be doing much because that's not what I'm best at, and it's not my trading style, and it's not required or necessary to grow an account, right? So me personally, I don't like holding. In terms of big losses, they're created by big position sizes, and they're also created by holding. If you have a small position size and you hold and you let a loss run, it is still going to be a big loss. It might not be a big loss on the portfolio potentially, but it's going to be a big loss compared to your wins, right? So big losses come from holding, and they come from big position sizes. So in terms of the sizing on my portfolio, I am going to be sizing in about 10% to 20% of my account per trade, right? So I'm going to be using a cash account. I'm using a Webull cash account. This is another trick that would have saved anyone growing a small account a fortune. The only way, if you want to grow a small account and trade options, the only way to realistically do it is with a cash account. If you're going to do it with a margin account, you're going to be held by the PDT rule, and it's just not going to be possible. You're going to also be taking, if you use a margin account, you're also likely going to be taking much bigger position sizes because you are limited to the trades you can make per week. 3 trades over a 5-day rolling period. Since you are limited, you therefore are going to take bigger position sizes as well, which is going to lead to bigger losses. If I have a cash account with Webull, I can size in on a contract. Let's say I have $1,000 and I'm trading a same day expiration and it's $2 a contract. I was literally doing this today, right? That means that contract is 20% of my portfolio. I can get in and out of that. I can get in and out. I can get in that contract, and that's $200 of cash used. I still have $800 cash left because it's a cash account. That means I can make 5 trades that day. If the contract was $200 each time I get in, I can make 5 day trades that one day, and the funds settle the next day. That's the trick and the key to trading, a small options account. It has to be a cash account. You'll have much more trades because you can use up all your cash, and the cash settles the next day in the morning. So if I'm sizing in 10% of my portfolio per trade, that means I can make 10 trades every single day, right? It's just the contracts have to be the size. And I'm telling you, in terms of the contracts that I'm trading, these contracts are like $1 to $3. So if you have $1,000, that's like 10 to 30% of your portfolio. So a good amount to start with. I gave some brackets. The entry to barrier ideally would be $1,000. That would be the entry to barrier ideally. A good balance, you have more of a cushion, would be $2,000, and then the best would be $4,000 not required, right? But it's ideal to have a little bit of cushion because say, you start off with a couple losses, right? If you don't have a cushion, then you're kind of out of the game and you're gonna have to refund the account. And there's certain principles that you have to follow with this strategy. So ideally, you're gonna want $1,000 in your account to, participate in the small account challenge. And then, in terms of contract selection in my style, I'm going with the closest strike that's at the money. So if SPY's trading at 393.20 and I think it's going to go down, I'm going to go with a 393 put strike. If SPY is trading at 392.70 and I think it's going to go up, I'll go with a 393 strike. I'm going with the closest strike price that is at the money. The closest strike price that is at the money, the closest one that is out of the money, right? And I'm not going far out of the money. In terms of me going out of the money on SPY, I'm trying to keep it as close as possible, whether that's 10 cents, 20 cents, 30 cents. I don't even want to be like more than 50 cents out of the money. So it's an at the money strike. That's what I call it. It's an at the money strike. It's the closest one to the stock price, basically. Expirations. Expirations are typically going to be the closest expiration, if not the next one. And like I said, there is some rare exceptions where I do hold these contracts. If I do hold these contracts, with that being said, it's going to be a day where I feel more directional and confident in holding, not what I'm best at personally. And on these days, I'm going to be taking 50% to 70% of profits at key levels, and then I'll be leaving 25 to 50% on left to right for the bigger side of the move, for the bigger side of the win. Those trades will typically occur twice a week, what I'm best at is scalping, right? So you see there's differences between these two strategies, right? So it's like if you trade two different strategies, you're gonna need to have that ability to really determine and really figure out when is the right time to hold. And that's very tough to do, to be able to figure out differences. You're gonna have to be very aware, very conscious. It's not gonna work all the time. This is why, in terms of my motto, I just don't hold, because holding leads to big losses. Whether you size in small or big, it really leads to big losses. And holding not only leads to big losses, but it actually leads to giving back profit. It really does. It leads to giving back profit. If you're wrong about that directional move, for example, you could, we're getting perfect entries. I'm getting perfect entries. I'm timing these trades like a sniper perfectly. That's my style. So if I get in at a perfect entry and I time it perfectly, and it has a nice little move in my direction, I could be up like 20, 30, 40% within minutes. And then it can just go against me and the trade can go red, and that sucks. So not only does holding, in terms of my style and way of trading, it gives back profit. It gives back profit and it creates big losses. That's why I dislike holding. There is ways, if your style is to hold and aim for bigger moves, there's safer ways to do it. There is certain ways to do it, but it's just not my preference, man. I like getting in and out, locking in my profit, and then resetting and preparing for that next best trade, right? That's what I like doing, right? So some rules to follow: best entries and timing perfectly after confirmation. So we get the best entries, we wait for the confirmation, and then we wait for the opposite move of that confirmation to get it at the best price, and we time it perfectly. No big losses. That's the most important rule. No big losses. No big red days. Keep losses small by entering at amazing prices, right? If you cannot get the best price, if you cannot get in at that confirmation that I gave you, then forget about it. You've already lost entering into the option contract. You're most likely already going to be down, right? Forget about it. You're setting yourself up in a position to lose, right? So most important thing is that entry, sizing in accordingly, 10 to 20% of my account. Don't hold losers too long, and don't take massive position sizes, right? The max position size should be 20%. With that being said, losses should never be held longer than wins. My average hold on a winning scalp will be like 10 minutes, and that's more of a longer time frame. And with that being said, like that's like losses should not be held very, very long. Losses should be held less than winners. And do not add into losers. Do not average and add into losers. Do not do that. Does not work like that. Do not do that. If you're adding into a loss, that means you didn't get the best entry to begin with. There's no reason to be doing that, right? You don't want to hold into a loss, even if it's a small position, starting position. Forget that. Just position yourself, your mindset, to trade the best prices only. Don't position yourself to be like, you know what, it's going to be a bearish day. It's not the best entry. I'll take a starting position here. And then if it rips against me, I'll add more here because I took a starting position and the day's still bearish. And then if it doesn't go in your favor, now you're stuck with a bag. Do not go doing that, right? The market doesn't care what you think what you think is going to happen within the entire day, right? It's a lot harder to predict what's going to happen within the entire day than it is to predict what's going to happen in the next couple minutes, in my opinion. But obviously, certain days vary. Certain days it's other way around. This is where it gets more complicated, and this is where holding can really complicate things and make it a lot harder to grow. But I am going to try to enter some really good trades as well, once or twice a week, where I do try to hold. And to protect myself, I'm going to be sizing in less on these because the wins are going to be expected to aim for bigger. So I'm going to try to size in a little bit less on those as well, and cut losers quick. Take profits quickly. Minimum goal is like 20%. Get in, get out, make a quick 20%. Sometimes it's going to be less than 20%, ideally like 10%, get in, get out. And then other times it's going to be a bigger win. A bigger win could be 30 to 50%. And this is all going down within like 10 minutes during the most volatile times of the day, during very momentum, rapid price action, right? And the fourth rule is no swing trades. If you want to swing trade, open up a second account. Do not commingle money in your account. Do not commingle strategies. Do not commingle the money, right? You have an investing account. You have a day trading account. You have a swing trading account. It all has to be tracked separately. It is going to screw up your account if you don't listen and follow instructions, right? So one of the most important things is that cash account, I'm telling you. But these have been the results so far. Like I said, I started this Monday with $3,941. So far, the portfolio is up 8.41%. Yesterday, I made 4 scalp puts, and the trend was bearish yesterday. The portfolio was up 7.5%. It was very, very big yesterday. I basically exceeded, 4 times my daily goal. My goal is to average 2% daily. Today was a smaller green day. The reason why the green day was smaller today is because I scalped against the trend. So in terms of the trades that I made today, the trades that I made today were scalps against the trend. So in terms of scalping, I would suggest, especially if you're new to this, do not scalp against the trend, right? It's very hard to make money scalping against the trend. The losses are going to be a lot bigger typically, and the wins are going to be a lot smaller because you're scalping against the trend. But if you get at the right price and you get out super quickly, it can work. You have to really know what you're doing. But this is something I don't recommend. It wasn't some sort of amazing setup. What I was seeing was I was seeing all the resistance in the 390s, but there was no gap. There was no special strategy. It just looked bearish at the time. So when I saw these dojis forming at 392 in this confirmation come in, I started scalping puts, got out on a quick 30-cent pullback, got out on a quick 30-cent pullback. I was buying the puts at 392. When it dropped 30 cents, I got out. I did it twice. With that being said, within those 30-cent drops, the contracts went up 7% in about 5 minutes. And I did it twice. I knew it was not going to be great of a trade. So, and I knew I was scalping against the trend. I took a 14% position size. I was 2 for 2 on the puts, and it brought the portfolio up 1.40% on the day. So this is going to be me planting the seed and showing you guys that it's possible to grow a small account with this strategy and that you should be using a cash account. It's also going to show you in terms of what I teach, there's not much of a difference between a cash account and between a margin account in terms of the success and style of this strategy, because I'm not going all in. Whether you have above 25K or under 25K, I'm not going all in. So if I'm making a couple trades a day and I'm sizing in 10 to 20% of my account, that means I can pretty much make unlimited day trades because I'm not making usually more than 4 trades a day, and I'll still have cash left, for the day. So I can basically make as many trades as I want with my strategy, with my style. If you want to sit there and make a million trades a day, you can't go doing that with a small cash account. But if you're trying to make, a couple trades a day, you can do the math and calculate with the cost of contracts. They're typically like $2, $3. It depends if the expiration is same day or not, but they're typically like $1, $2, $3, sometimes $4. But in terms of my trading approach, it's a couple scalps at the most as of now. So whether it's a cash account or a margin account, it's not going to affect me personally, right? In that sense with the strategy. Now, if I was using a margin account, I wouldn't be able to do it because I'd be limited to 3 trades every 5 days, right? Every 5 rolling days, I'd be limited to those 3 trades. That's the biggest difference. I'm telling you, if you take this approach where you're sizing in smaller and you're compounding the account, the principles and the foundation that I'm going to lay out in between the documentation of this challenge, you're going to see this is going to be the best approach. This is literally going to be the best approach where you get in, you get out, you scalp like a sniper, and you try to go with the trend instead of against the trend. It's very hard to scalp against the trend. That's what I did today. The reason why the gains were so smaller today is because I had less trades. I had 2 trades today. They were both wins. And they were 7% wins. They were alerted, within the section in real time. But that's why it was a smaller day, because I had half the trades. Yesterday I had 4 trades. They were all wins. Today I had half the trades and the wins were smaller. And the wins were smaller because I was scalping against the trend. If I scalp against the trend and I feel like I'm going to be right, sometimes I'll do it. It's not the best thing to do though. But if I do it, I'm going to get in and out very, very quickly and the win's going to be less. The win was only 7% per trade, right? But it worked. And the portfolio was up 1.40%. But leading into the challenge, that's one thing I want to focus on. So leading into this challenge, I want to focus on getting better at 2 things. 1, not scalping against the trend. I want to try my best to avoid avoid scalping against the trend. Number 2 is going to be trying to identify situations where it makes sense to hold a little bit longer, because most of my trades are going to be designed where I don't hold too long. So having that conscientiousness and preparation, having that preparation in advance, and then having that conscientiousness in the moment, in real time, to really figure out and determine if it makes sense to leave on 30 to 50% where I'd normally be selling, to just let it ride, leave on half size or leave on 25% of size where I would normally just be completely out. Try my best to determine when it makes sense to do that. And in terms of a day to do that, that was yesterday. And it can be determined. It's not going to work all the time, but it can be determined when a setup is going to be bullish for the day or bearish for the day. Which means you should hold a little bit normally than you would. And we already know how to get the best entries and time it perfectly. So one thing I want to work on personally is just not that it's required to or needed with my strategy and account growth, but I do want to work on identifying doing a better job of holding and identifying days where it makes sense to give it a shot of holding 30 to 50% of my size, not full size, just like most likely 30, 25%. So yeah, those are two things that I want to be working on. My biggest edge with this is the strategy, the risk management, the position sizing, is the ability to cut losses so quick, sizing it appropriately. Now, one thing that can help me out as well is if the wins were a little bit bigger, if I had some bigger wins. So what's going to generate bigger wins? I have the best entry, right? I have the strategy. What can generate a bigger win is if I cut losses quicker, that automatically makes my wins bigger. And if I hold a little bit longer on times where it makes sense to hold a little bit longer, and if I feel like a setup is going to be much better than a previous setup, then size in a little bit bigger. Instead of doing 10%, do 15% or do 20%. There's different risk management strategies. I could size in like 10% on a trade and like get stopped out quickly. And then next trade I could enter in 15%, get stopped out quickly. Next trade 20%, get stopped out quickly. Next trade hits 25%, boom, just made it all back like that because the position size was bigger and the RIN was somewhat decent. So there's a lot of strategies, a lot of different ways with risk management, position sizes. That's going to be one of my biggest edge with the challenge, and I explain to you things that I want to improve on as well. But yeah, so far I'm 6 for 6 on the challenge with 100% win rate, and I'm going to keep it going. If you do want to participate in the challenge, it's going to be the first link down below in the description. I'm telling you, this is going to be the legacy. This is me creating legacy, me creating the seed, showing you guys the new wave of growing an options account. When you think of trading options with a small account, the people you follow, the people you learn from, they'll typically go all in. Some of them aren't even using cash accounts. If they are, they're still sizing in way too big than they need to do. And that's how you blow up, right? So with my approach, I'm basically growing a small account the same exact way I would grow a large account. That is the difference. I'm so sick and tired of people saying, oh, he has it so much easier. He has a large account. No wonder why he's successful. He's a large account. It's so much easier to grow a large account. There is certain advantages, but if you're not making a lot of trades and you're using a cash account, there isn't much differences. Yes, you do have less of a cushion. You're still going to be limited to even trading more that day, but that's a good thing in most situations. You're not going to want to make you're not going to want to make more than like 3, 4, 5 trades a day with a 20% position size. You're just not going to want to do it, right? It's about trading the best setups at the best prices, a couple trades a day at most, right? So there's really not too many differences between the large account and between the small account in terms of my approach to this. So I'm going to be growing this the same way I would be growing a large account. And it is me making a sacrifice in a sense because my income is going to be going down in terms of scalping. And one of the ways how my income is going to go up, I'm going to focus a little bit more on swing trading with the larger account. I'm still going to be entering certain scalps with the larger account. One thing I'm going to be doing is with the large account as well. If I feel like I can hold a trade, so like once or twice a week, I feel like I can hold a trade longer, I'm going to take that trade with small account and large account. So there's going to be ways I'm going to make up for it. But the point being is like, this is just something I have to do. I have to lay out the foundation. I have to do it once. I have to do it once. We're going to have over at least 1,000 members like join this year. We're approaching. So it's like, this is what people want. I got to deliver. And then once I deliver, then I could just do whatever I want from there. I got to do it at least once for them where I can show them I can grow this small account. And then once I deliver on that, it's like, I never really have to, unless I want to, never really have to go back to a small account if I wanted to, like, never have to trade a small account again unless I want to charge a lot of money. Like I am considering raising the price a lot super soon because I already know this challenge is going to be off the charts within time. I am considering, like I told you guys, end of June, the price was most likely going to be raised. And another reason was because of the small account challenge that I was planning to start as well. But yeah, I mean, this is just something I have to do and lay out that foundation and just having that documentation, and turning that into a course, into a video lesson library for members within Trader Society. It's going to make the program so much more valuable where I can just charge so much more for it. Even though I already could, it's going to make things way better. And it's been the most requested thing within Trader Society. So I do have to deliver in that sense. So I have been sick. I got sick on Saturday. I've still been trading though. But I have been sick. I don't know if you guys can tell or not, but I have been sick. Like the reason why I'm not as bad right now is because I slept for like 12 hours, so I'm not gonna be as bad. But I have been pretty sick since you know since Saturday, and today was the worst day. I literally woke up and made those scalps and it worked out. Like trades would have been a lot better if I was like able to trade earlier. But I have been sick, so just keep that in mind. I should be better hopefully by the end of this weekend. But I'm gonna try my best to deliver and do as much as I can while I'm sick, because this is what I live. This is what I live. This is what I breathe in terms of the real world, in terms of outside of there. Um, it's just really not for me. I love trading. This is what I love doing: trading, helping people, running businesses. Like I love what I do in terms of trading in this online world. This is what I'm passionate about the most. So I'm just gonna stay focused on this and just not get down about other things. So yeah, if you do want to be a part of it, it's gonna be the first link down below in the description. Once you join, you get lifetime instant access. Once I am 100%, I'm going to be live streaming where you see everything live in real time. Right now, I'm learning all the trades real time within the Discord server, answering questions. But I will be live streaming everything in real time once I'm not sick again. It should be by the end of this week, hopefully. And I'm also going to be, once I'm not sick, actively on the voice channel. So here's the thing. If you're following someone who scalps, they get in, they get out very, very quickly, especially during volatile times. The reality of the situation is, even on a live stream, depending on where you live and your connection, there's going to be a delay. For some people, it's a 10-second delay. For some people, it's a 30-second delay. If you're in another country, it could be even a 1-minute delay, right? But the point I want to make is the only way to make this real time, I'm talking 100% real time, typing on alert, it takes time to take out that alert. It takes time to get that notification. It takes time to read that alert, to process it. The only way to make this 100% real time is a voice channel, in a Discord server where there's no delay, like me and you talking over the phone, right? That is going to be something added within this channel, especially with my style of trading. That's very important. So that's going to be added within this channel when I'm not as sick. I'm trying my best to get better, guys. Just me making these videos alone is pushing forward. But in terms of me being sick, like I've had a lot of sleep, and like I feel like I can make a video. I'm gonna do it. I'm not just gonna sit here and rest all day and continue to rest. Like I gotta push myself out of this as well. And that's what I'm trying to do, because I want to be trading live with you guys every single day at market open. That's what I want to be doing. I want to be trading live. And with that being said, a lot of my trades, like I literally trade on my phone. It's crazy. I got to start making videos on my phone as well to show you how I trade live on my phone, because I've actually found I trade a lot better on my phone than I do on desktop. This Webull app, you can switch like that. The way you can switch between a chart and option contracts is like lightning speed. It's just something, the way with the charts, the way with how the app is set up, it's just, I find it so much quicker, so much faster. That's another thing in terms of reading price action. One ability to have a gift in reading price action is you have to be extremely comfortable and aware and conscientious and have a lot of confidence in the charts you're using. So if you don't have that in the chart you're using, you got to switch. You got to switch charts. So for me, TD Ameritrade mobile app, Thinkorswim, TD Ameritrade on the desktop, and then the Webull trading app for the executions. And then I'm also starting to get used to Webull charts. I like their charts as well. So that's what I've been doing. But that's another very important to make. You have to have that confidence in price action, in reading the charts, and that has a lot to do with the charts you use. It's crazy. Some people have developed strategies solely based off of certain things, just by looking at charts, just by looking at a line chart in Robinhood. Strategies have been developed doing that. Like it's just a certain feeling that you get. It's a certain thing that you know because you've seen it so many times and you just know. But the point is, if it wasn't on that platform, you wouldn't know. That's some things that I want to make a point as well. So to participate in the challenge, you're gonna want a cash account if you have under 25,000. I would still personally recommend, if you have a cash account, even if you're above 25,000. It just depends. If you lack that discipline where you're just going to keep on trading, going against things, and then I personally think for most people, it's just best to have a cash account, because if you have a margin account, you're going to be able to just keep on trading. You can go all in. There's no limitations, and certain limitations are good and certain limitations are bad. And in terms of the way my strategy and style is set up, I actually think it's good for me to be limited in a sense. I really think that. But I can see myself, man, because I had one streak this year where I was super hot and I had a margin account and I was taking big sizes. The portfolio grew like so fast, so quick. And then from there, I've kind of just like, been playing it a lot safer. I don't want to keep on doing that. So the point of this challenge is to just really show you how to normally grow an account, to instill the right principles, to instill the right foundations, to give you something that is everlasting. This isn't going to be a, let's start with nothing and let's put all of our money into a contracts and hold through earnings, or let's just hold these out of money contracts. It's not going to be like that. This is something where you can go from not much money, like $1,000 ideally is what you'd want bare minimum to entry. If you have a little bit more, you have a cushion, more of an advantage. But like, you know, this is something where you can take with you from a small account and then to a large account. You're going to see there's not a lot of differences. There's really not, in terms of the style of trading. But I do see myself when I turn the small account to a large account, I'm gonna be a lot more eager to be making more trades and stuff like that. I could see myself trading even more because this is gonna improve my style of trade. I could see myself making more trades. I could see it happening. I could see myself making a lot more trades. But yeah, this is gonna be it, man. So the goal is to really get you up past that 25K. Not that you need to, but to get you there and to show you how to turn a small account into a large account. And also you use these same principles with a larger account. You take it with you. So it works with a large account or with a small account. If you have a margin account, just make sure you're not going all in. Make sure you're following the rules taught within the small account challenge, right? And make sure you're not over trading, right? If you have this margin account, you can continue to go all in. You can continue to overtrade. You can get margin called, right? There's a lot of disadvantages. These limitations aren't so great. If you trade the way I do, you would start to see that. So yeah, it's gonna be the first link down below in the description. If you want to participate in the challenge, it's a limited time only. Like I said, this is something I'm rarely gonna do personally. As time goes on, I'm actually gonna be hiring students. I'm gonna find students within Trader Society, hire them, and then they're gonna be teaching a small account challenge because this is something that is truly gonna limit my income. This is truly gonna take a hit on my income, but it's going to allow me to grow in other areas of my income. It's going to allow me to grow more on swing trading. It's going to allow me to grow more in terms of holding trades I feel comfortable holding. I'll take with a larger account. It's going to allow me to, look for other ways to make money as well with a large account, right? And it's also going to help, instill a seed and plant the foundation that's needed for Trader Society to get to the next level as well. So, yeah, it's just something that I think is the right thing to do right now. But I can say, this is something that just don't expect me to keep doing this like every year. This is very, very rare. And when this does turn into a large account, I'm gonna look to hire at least one student who's gonna consistently grow small accounts, who just specializes in consistently growing small accounts, and then they can grow a larger account behind the scenes if they want. They can do what they want with that. But that's what I want to do in the future, is have someone else teach a more small account strategy. But this is going to be more of a gift that I'm laying out now in real time. And then for people who join later on, who missed out on the opportunity, they can watch the progress and learn from it. And then they can learn from someone else who's teaching within Trader Society on the small account. But like I said, with my strategy, it works for small accounts and large accounts. So I'm going to leave it off at that. If you want to join, it's the first link down below in the description. The small account is limited time only. In terms of what you get lifetime access to, you get lifetime access and instant access to, so remember the challenge, it's a limited time only that I'm doing right now. In terms of what you get lifetime and instant access to, that's included everything on the first page down below where you can sign up. You get access to the video lesson library where you get position sizing, risk management, lessons. You also get psychology, mindset training. You also get, You also get, the unique gap trading price action strategies. When to buy calls, when to buy puts, when to be bullish, when to bearish, how to determine trend reversals, how to determine who's in control for the day, all of that stuff, day trading and swing trading strategies. You do also get access to the Discord server. These are the live streams that I do every single day at Market Open, where you get to watch me trade live at Open. You do also get access to, everything included within Trader Society. It's all explained down below. I do have to go now. I have to prepare and get ready for tomorrow. Huge, massive day tomorrow. Got to take care of myself now and prepare for this, guys. Hopefully I get well soon. Still a little sick, still a little bit under the weather. But like I said, best time to join is now, especially once I pull this off and have the footage. The prices are going to go up exponentially. And as the small account is growing, I'm most likely just going to raise the prices too. Like this is the lowest Trader Society will ever basically be. For those of you wondering, like there's a promotion, a coupon code, like this is the lowest it's ever going to be. And soon enough, the prices will go up, especially once I start investing back more into the business with hiring people and other business expenses behind the scenes and stuff like that. It takes time, steps to grow a company, but once I do make those smart investments and once I pull this off, expenses are definitely going to be going up, and definitely going to have to be charging more for the program. Our approach is quality over quantity. We want high quality people. We're not looking for people who are trying to, I'm not saying you can't turn a couple, like $1,000 to $500 into like 10,000 or 50,000 quickly with options. You can, it's possible. but the vast majority of the time, you're going to lose it all. So it's not ideal for the average person. And you're not instilling the right principles that are going to sustain you to grow your account. Do you really think someone who takes $500,000 and turns it into $20,000, $50,000 quickly is just going to stop and then do what they're supposed to be doing to actually grow a larger account, which is the same thing they could have grown with a small account, with a cash account? No, because they never instilled the principles. They didn't have the awareness in the moment to switch. They got emotional. They said, oh, I'm going to get rich quick. I'm going to keep on doubling the account. No, I'm going to show you guys the turtle trader is the way to go, to trade like a turtle. Small compounded gains in tiny microscopic losses. You do it this way, you will be in the game so much longer. And if you're in the game longer, even if you win or lose, with this approach, you will learn so much more. And the lessons won't be expensive to learn because you're still in the game, which means you have time to trade, right? And it's a small account. So it's not like you're going to be losing a lot of money if it doesn't work out, and you can always refund it within time, right? That's going to be this approach, man. You're going to see this is the best way to do it. If you want to join this is something, if you're in it for the long game, you're trying to get rich, you're trying to hit quick, go follow somebody on Twitter. All that stuff's free out there. When you see these guys flip a lot of money very, very quickly, guess what? It gets to a point where they take out that money and they restart. All the power to them. For the average person following them, they're going to blow up their account. I'm not saying there hasn't been people who've specialized in a strategy where they can, where they have a different approach to risk management. Maybe their approach is, I'm going to take this $100, I'm going to take this $500, flip it into tens of thousands of dollars, cash out, and then restart. Now I have this money I can live off of. If the small account blows up, which a lot of the times it will blow up because of a losing streak, or if their trades don't work out, sometimes their trades don't work out, it will blow up. They have a cushion now. That's how they get their cushion, right? If that's the approach you want to take, I'm telling you, it's not going to lead to life-changing money long-term. All these big hit wonders, they're known for like one trade or one great rally they had or one great win streak, right? They're not known for keeping the money. They're not known for sustaining a strategy where they can consistently trade with a large account, where if they have $1 million, they put in $100,000 into that trade, make a 20% return, make a 30% return, boom, they made $20,000, $20,000, $30,000, do it all over again. Then they're going to be like, why would I ever grow a small account again, right? That's what I'm showing you how to do. And I'm telling you, like, I'm doing it basically just this once time. I'm also doing this because it's fun. Like, I've done very, very well financially this year. This has been my best year ever financially. And this is something that I believe is good to help out the members within Trader Society. And I've already, like, I'm good. I don't need to be the richest person. And I think in terms of long-term for my trading and for my company, Trader Society, I think this will exponentially help it out in the long term. So I'm willing to make that sacrifice, right? So if you do want to join, it's the first link down below in the description. I encourage you to do it now because you will see how much this will help you in the long term by instilling the right foundation, by instilling the right principles. I will see you guys tomorrow.